The question is about diversification, and I've got a dual answer to that. If you are not a professional investor, if your goal is not to manage money in such a way as to get a significantly better return than the world, then I believe in extreme diversification. I mean, so I believe 98 or 99%, maybe more than 99% of people who invest should extensively diversify and not trade, and not trade, and not trade.
Is this some of the wisest insight Buffett has ever shared with us? Or is it outdated and overripe? Welcome back to the channel, everyone. I'm Skylar James, and this is the opening episode of a series I'm calling Stuff Buffett Says. So should 99% of people really not trade and instead just own index funds? And has anybody asked Buffett if he knows about YOLOing? If I get the winning bid for the Buffett charity lunch, that will be the first question I ask him. Until then, we can look into the past for answers. Does day trading, swing trading, or just being a long-term investor with an itchy stop-loss trigger finger actually hurt your returns? The answer is yes. The data is clear. Shifting in and out of positions leads to subpar portfolio performance. The experts think it happens for a few reasons. First, the tax man cometh, and he's going to want a slice of both of your short and long-term capital gains. Losing 10, 20, even 30% of each profitable trade adds up, and it eats away at those gains. On top of that, depending on your status with the IRS, you may be limited in how much your losses you can actually deduct each year. So reason number one, you only end up pocketing a portion of your winnings when all is said and done. Reason two, well, even with commission-free trading being commonplace, Robinhood will not save us. Well, it might save us on fees, but it doesn't change the outcome for you. So say the statistics anyway. You're still doomed to fail if you trade regularly compared to just buying and holding. If anything, free trades make it so tempting to fiddle and tinker with our portfolios that we get cute with it, trying to outsmart the unpredictable markets. Which leads us to point three, the most convincing of all. Good old-fashioned time in the market matters. These are some incredible stats. Check this out. If you missed just the 5 best trading days in the last 40 years in the S&P 500, meaning you traded out and missed gaining on the 5 biggest up days, but you were present for the other, 40 years times 365 minus 5 days, but you were present for the other 14,595 days, you would have earned a 35% lower return than if you had invested for the entire 14,600 days. 35% less just for missing 5 days of almost 15,000. Set the calendar to whatever time frame you'd like. You want to look at the last 20 years, the last 15 years, the last 90. The same phenomena again and again. You need to be present on the biggest days to get the big gains, and that is reason number 3. I'm not saying that zero retail investors can be active traders, but really introspect and ask yourself if your knowledge and skill is in the top 1 or 2%. For most of us, we should have broad, diversified portfolios and as much time in the market as possible. I'm not saying that everyone should be a passive investor. I think it's paramount to our success to be engaged, thoughtful, and analytical investors so that we can help guide our portfolios and capitalize on emerging macroeconomic trends. So what I want to know, is Buffett right? And does he practice what he preaches? And is he right in the broader sense? Well, having amassed a $100 billion portfolio over his lifetime, I think that gives him some credibility. The stats and the history books are on his side. So don't trade in and out. Identify those great investments, those great businesses at great prices, and ride that wave into the sunset. Thanks for joining, and I'll see you on the next one. I mean, honestly, how many of you take the advice of a 90-year-old grandpa? You would think that the investing landscape would be significantly different over the last few decades, but I guess the more things change, the more they stay the same. All right, cheers, thanks.